We got some breaking news here. Let's bring in Jenny Horne, markets correspondent, here to help us break this down. Jenny, retail sales, what do you have for us on this number?
So, Tom, so far, I do think it's interesting because I think there's a lot riding on retail sales, especially ahead of course, a really critical Fed announcement here. But so far, what we're seeing from retail sales is a bit more of a mixed picture, I would say, because I think we were expecting overall things to come in a bit better than expected. And so far what we're seeing is the actual figure rose about 0.7% for the month. That was slightly above the estimate, or at around 0.6%. Prior revised was around 0.5%. And again, beating expectations, core retail sales did increase around 0.2% year over year, missing forecasts for a gain of around 0.4%. So then, of course, the question does remain, what will Jerome Powell do now? But I do think that when you break down some of the individual components, as you do, we saw a rise of about 2.6% in cars and parts, 1.8% online, about 0.9% in sporting, hobby, and music, as well as around 0.3% in furniture and around a 0.3% gain in electronics. Whereas we saw basically no growth for the month then in health and personal care, and then a slight contraction when it came to grocery. That was down 0.2%. Clothes were also down for the month at around 0.2%. Restaurant and bars were down another 0.4%, and department stores were down 0.6%. So all things considered, above expectations. I think that this was largely actually what Oliver Rennick was expecting yesterday when we were previewing this ahead of course, the Fed announcement. But I think that everyone is saying then, does this change Jerome Powell's course? I think, of course, not.
Yep, up 0.7% above expectations. Vehicles and gas up only 0.2%. So, as you mentioned, maybe a little bit of spurt there into the end of the year as far as auto sales goes at this point. So, thanks for that, Jenny. We're going to talk about that more next with our next guest. But Jenny, when you take a look at some names that have been moving the market here, got an upgrade in Tesla late last night. Stocks hitting more all-time highs. Not surprising, right?
I know the momentum continues. Yesterday, we looked at a note from Wedbush's Dan Ives, of course, that raised his price target to $515, up from $400, which is considerable. His bull case, though, is $650 by the end of 2025, which I think is always worth noting. However, Mizuho was another that also matched with a $515 price target. That's up from $230. And the firm does believe that Tesla's autonomy software stack is improving towards these broad communications, and they also see a loosening regulatory framework, which positions then the autonomous segments for upside. So in addition, they also do argue that the new Trump administration policies, like consumer EV tax credits, could also position Tesla better with a lower EV cost structure relative to its peers. So more upside for Tesla continues. This name has risen, now so substantially since the election, of course. It's really been a back half of this year story. But I think at this point, you're basically just trading on Elon Musk, because nothing about the fundamental story has necessarily changed. I guess maybe if you see a regulatory environment that's more favorable for Musk, sure. But I feel like we are just seeing this momentum continue. And when the pendulum swings, it feels like in Tesla, it swings hard in one way or the other.
Yep, stock up now 90%. This is one of those names, you think a lot of people have opinions on this one, but at the same time, he's in Trump's pocket. Trump's in his pocket, who knows, but it should be a better regulatory environment for him moving forward. Jenny, the next name we wanted to look at is on the flip side. We're in correction territory, and Nvidia down now in pre-market trading. Now we're up about 15% from those all-time highs that we saw just last month.
Yeah, and I saw that we officially yesterday pulled into correction territory in Nvidia shares, and like you said, now dipping actually slightly beneath those levels. It's not the first time we've been here. I think it is important to note, because I do think there's a psychological level associated with seeing that you are officially in correction territory, now off those highs by about 13.7%. So again, we've been here before. I think that a lot of times this can be seen as perhaps a healthy thing. I don't think it's always read as a negative, like the way the headlines would try to make it seem. But right now, during the session we saw yesterday, it closed down about 1.7%. It declined as of yesterday about 11% from that all-time high. But the street, I think, continues to wait for evidence of really how they can continue to build out their sales of their Blackwell AI chips. After the recent slump, though, shares still do remain. I mean, this is still the top 5 best performing stocks in the S&P 500 this year. It's still up 166.5% on the year. So it's not having a bad year by any means. I think that you have to consider like the paper trail. I mean, look at Broadcom, the fantastic move we saw to kick off the week yesterday and a 24% jump to close out the week last Friday. I mean, the money has to go somewhere. I almost think the attention right now has been on Tesla, Broadcom, maybe just Nvidia taking a back seat. But again, I don't think this is a bad thing. I think that corrections are oftentimes seen as a healthy reset, especially for a stock that was pretty much at its highest valuation ever.
Yeah, you wonder, there's going to be some analysts that have to come out eventually and start, because most of the price targets here, even when it was hitting all-time highs, they've been up at 170, 190, 180. You just have to wonder, is somebody going to just come in and put the hammer down and say, well, I don't think these guys can upgrade Nvidia because they all have buy ratings on it, but price target hikes may be coming down the pipeline at this point. RSI getting close to oversold at this point, so we'll have to look at this one some more. Great stuff. Thanks to Jenny Horne, markets correspondent here on the network, breaking down a couple big names